By the way,
but I also
yes. Nice meeting
let's see, you want to do it in that order? Wait, who did you order that of? Arlington, Katie, Joseph.
I'm here.
We're missing Mark. Joseph, thank you. Do we call you Joseph?
Joseph.
Mark, haven't seen him. Michael, can we sit next to Dina?
Okay. No one wanted to sit next to her. We all decided.
Mark doesn't show, we'll just move the chair out. Yeah, we'll just move the chair out. It's 9:30 though, right?
It is 9:30, right, we're missing Mark, but.
Claudia, what do you think? Should we wait, Claudia, should we wait for Mark?
I'm gonna send him a quick email.
Okay.
I know he was here last night, I saw him,
Oh.
yes, so. Yeah, maybe, that's not like him though. That wouldn't be like him.
That's really funny. So anyone else?
But it's time to get the introductions, maybe. Yes.
Oh, yeah. Students are not nervous because they have to pitch in an hour.
Reading.
I've been there
All day long.
Yeah.
Right.
The judging event goes on at 11, I think. Yeah. Are you judge? No. Oh, you are? Yeah. Okay. Are you judge? No. Judge, are you judge? At the pitch thing at 11? Yeah. That's going to be fun.
There he
Fun
is.
yesterday.
There we go, we saved
Yeah.
time for you.
I'm waiting for you. Hi, how are you?
Thank you, Mark. See you. Hello.
Okay. Are we ready? Can we get started?
Now you can get
We can. Good morning and welcome to our session on conversation around transformation, investing in transformational technologies. I'm Janis Collins. I'm the co-founder of The Refinery, also probably one of the oldest programmers on the planet. So I will be moderating this conversation today. And as we all know, breakthrough technologies have the power to really revolutionize existing markets. They can create new opportunities and they can disrupt new markets. So they're important, and it's important to understand if you're going to be an investor or you're going to move forward with technologies, how do you identify a breakthrough technology early? How do you know what its potential is? And what criteria would you use to invest in it? So we're really lucky this morning to have 5 very experienced investors in early stage technologies. And we'll be talking about some of the expertise they have and their perspectives and what they've used to identify breakthrough technologies and what criteria to invest in. And with that, I'm going to let our esteemed panel introduce themselves, starting with Kerty.
All right, great. Hi, I'm Kerty Levy. I'm the managing director of Techstars in Boston. I've been with Techstars for 4 years. Sorry, this will be my fifth. Hello? Oh, okay. 5th accelerator that I'll be running in the fall. I ran the accelerator in Iowa for 3 years, and that was more Midwest-focused manufacturing, logistics, supply chain. Then I ran a crypto accelerator, and now I'm doing a generalist program in Boston. My background is international business from the CEO level to product management is my favorite role ever in startups, business development, the whole works all over the world. So I'll let you look at my LinkedIn to see the rest of the details.
Thank you. I'm Joseph. I'm an investor at Alley Corp based out of New York, which invests in material sciences and nanotechnology. come by way of academia, so if there's any academics in the room, I was in your shoes a couple years ago, and really specialize in looking how do we take deep science, deep technology, and bring that into the market, right? And so spend a lot of time doing that with our firm based in New York called Alicorp.
Dr. Mark Maybury, Vice President of Commercialization at Lockheed Martin, formerly First Chief Technology Officer at Stanley Black & Decker, worked very closely with Techstars, accelerating 40 companies. We spun out 7 companies. In a prior life, I was CTO and CSO at MITRE, and we spun out 5 companies, one of which became the core tech to a unicorn in the cybersecurity business. And this morning, I apologize for my tardiness because I'm very convinced we need much better access control because we just spent 20 minutes waiting in the line to get access to the parking lot. But we got in. We all got in. But my apologies nonetheless. Pain point.
Hello, everybody. I'm Michael Walden. I am a partner at Rethink Capital Partners based in New York. We are a socially oriented investment platform that has multiple strategies across both real estate and venture capital. I started with one of my partners who's a Yale graduate. I met a gentleman named Matt Greenfield years ago, who was the only PhD from Yale, English PhD from Yale that was running and teaching at CUNY and running a small hedge fund on the side. And so Matt is a unique person, but I met Matt years ago. And we started Rethink Education, investing into EdTech. It was, as we saw that as a interesting place to be with the transformation of the internet and what it was doing to education. That led us to, and that was before you were allowed to say the words impact and investing in the same sentence without being patted down the head and led down the hall to somebody's foundation for a grant. But that led us to a series of investment funds now, from education to Rethink Impact that invests into women and minority-led businesses, to Rethink Food, investing into food tech, and my new baby that I was talking about is Rethink Community, investing into real estate and thinking about community development. So thanks for having me.
Good morning, everyone. I'm Dina Routhier, and I run the corporate strategic venture arm of Stanley Black & Decker. SVD, it says. And so most people know us as a large power tools and hand tools manufacturer. We have brands like DeWalt and Craftsman and 48 other brands. And so it's the job of my team to work with all of our business units to understand their needs, their technology needs, their innovation needs, and then to look outside the walls of Stanley to find those technologies residing within early stage companies. And first and foremost, we do that to find mutually beneficial commercial partnerships with those startups. That's really where we go in. And then if those startups need capital to see our commercial partnership flourish, my team stands ready to make minority investments in those companies. Been there 5 years, came by way of corporate development. I was doing mergers and acquisitions at a software company called Autodesk. And then I spent 12 years before that at an early stage venture capital fund in Boston. And that's really where I learned how to do early stage investing. I'm excited to talk with you today. Thanks.
Thank you. Would you pass the microphone back? Oh, yeah, Kerty. Sure. I'm going to start with Kerty. So Kerty has invested in everything from early stage invested from ag tech to cryptocurrency. And so it's interesting to know if you could share with us your decision process to make some of these investments.
Yeah, sure. So I think one thing is if I'm running, and I've been working in accelerators mainly, I've been an angel investor as well, but when from the accelerator perspective, sometimes there's a theme. If it's a general theme and across the board, the way I like to think about it is founder, market, traction, idea. And why do I put those in that order? Because ultimately, I'm already attracting the people. In my case, I'm always looking at tech companies. So tech companies, founders are coming to me in the first place. So that very first bar is already set. But a founder who understands that this is a long haul. This is not a project. This is something that they understand. Maybe they came from the industry. Maybe they had suffered the problem themselves, and they're ready to work in this and solve whatever they're solving, big world problems, for the next 10 years. It could be shorter, but someone with that kind of conviction, it's really important. Otherwise, it's too hard to give up along the way. The other thing I look for is why traction is in there. It doesn't mean a number. It means, does this person execute? And that has a lot to do with, again, the founder. Do they have an execution mentality? Are they the kind of person who's going to go and keep trying to get something done? Or are they going to hear no a few times and then back off? And it just comes through conversation. In terms of the, other soft skills, also looking for people, if I'm going to bet on a founder, I want that founder to be able to engage others and recruit others, build a team, get people excited about working with them. And so all of those are pieces that go into that. But I would say majority of the work at the early stage is on the founder. The other thing I would say is that it just needs to be a large enough market. People can build companies in any market, but if they're going to go venture scale, it needs to be a really, really big market. And so we kind of assess that. And sometimes the founder doesn't know how big it can be, but we can assess through conversations like, okay, you see this right now, I see this, so that's okay. This is a big market. But those are some of the things to think about. How many of you are founders out there? Just curious. Great. Awesome. All right.
Okay, but before I go to you, Joseph, I just want to make sure we're all on the same page about transformational technologies, right? Transformational technologies are the technologies that are going to change our lives. They're breakthrough, they're game-changing. And Joseph, you've done some investing there, right? Nanotechnology and material science. What do you think is the next new breakthrough technology or key theme that you're looking at right now?
All right, so I'll take the rest of the hour. I think there's a lot of different impacts that scientists across a lot of different fields can be impactful. You can have medicinal or kind of, biotechnology as one sector and physical in the other. And so I spend a lot of my time in physical sciences and specifically right now in semiconductors. And so in my opinion, that's one of the best fields to be investing in due to a lot of different trends that exist today. Generally speaking, we're all familiar with the AI craze, but before the last couple months in large language models, that had been around, 2017 with transformers and kind of the development of more language models coming out. All of that's powered by semiconductors, and I think we've seen the impact of that in NVIDIA and other companies that are playing in that space. But I think the next future version of what that looks like is what I define as application-specific semiconductors. And so your car to your fridge to your smartphone will have very different chip structures in them and different use cases or avenues that they explore to make those products the best for them. And so we invest a lot today in companies, one in Edge AI, for example, where future chips need to be able to interfere or, go through language models at its use case versus in a data center. And so we invest there. Outside of semiconductors, we spend a lot of time thinking about energy. And so whether that's energy storage all the way through to advanced materials like perovskites for solar cells, et cetera, thinking about that. And then secondly, what other technologies exist today that have 100x differentiating potential than what exists? And that's a very important piece, regardless of industry, in my opinion, that's relevant. When you have a 2x or 5x performance, it just doesn't move the needle enough, particularly in industries that are very strong and very segmented. And so technologies that really have a fundamental impact on that, I think, are really impactful. And synthetic biology is having a moment there. Transportation and automotive in terms of autonomy are having a moment there. And robotics is another field I think is having a moment there. So I'll break it off there, but I think a lot of really interesting fields from a science and engineering perspective today.
Are there any specific areas that you think are underfunded right now?
I think semiconductors, and they are, as much as we all know them, other countries, China, Japan, Korea, spend a lot of money in early stage investing. We spend a lot of money in late stage or corporate investing. I think that needs to shift more towards the early stage, and yes, I'm absolutely biased on that. I also think more translational dollars in biotechnology. more applications of, I'm a nanoscientist, like you mentioned. Nanoparticles have long been shown to be really effective in drug discovery and therapeutic delivery. But we don't have enough dollars because those projects are very expensive and typically need a corporate backer. I think we should put a lot more capital into trying to solve disease and think through longevity as a general area.
Okay, great, thank you. So Dina, I'm going to jump to you, so we have to move that all the way down. You head up the Stanley Ventures.
Yes.
And it's really the investment capital. Is it also R&D or just outside investing?
So for us on my team, it's investment capital. We invest off of Stanley Black & Decker's balance sheet. So we use cash from the balance sheet to invest in startups.
So we heard a little bit from Kerty about how she approaches her early stage investing. Is it different than how you approach it? Can you talk about that?
Yeah, it's very different. Moving from sort of institutional VC to corporate VC, we act very differently, I'd say. So for us, it all starts with what are the businesses trying to achieve? Are they trying to move into adjacent markets? Are they trying to do more incremental innovation that year or those 18 months? So what we look for outside is totally dictated by the business units. So I speak to them on a daily and weekly basis, and I understand what their strategic roadmaps are. So, for example, we acquired our way into a $4 billion outdoor products business a couple of years ago. And so we sell things like large mowers that your landscaper uses to take care of your lawn under brands like Cub Cadet and Hustler and others. That product set that we acquired is primarily gas powered today, and we all know that that's just simply not sustainable. And so we are in a huge push to electrify that entire product set, transitioning from gas powered mowers, for example, to battery powered mowers. And so for us, that's a big transformation for us. For us, that's transformational. So it's all about technologies like anything that can convince the commercial landscapers to make that transition. So anything from charging infrastructure, teaching them how to do that charging infrastructure and then offering solutions for that, to figuring out what the battery pack should look like for those mowers. And we've decided on a swappable battery pack. So there's 5 slots, and the battery packs can be swapped out during the day because for the commercial landscapers, it's all about run time. I need to go from house to house to take care of these lawns before I run out of charge. So there is that range anxiety in a way, like the automotive industry has. So like I said, it's just all about what the businesses need and what will be transformational for the businesses versus maybe just looking at sort of what the most exciting technology areas are.
Yeah, so it's a little bit different than the other. So what's interesting about that is that you really take a look at what they need, right, and what technologies might. But how do you know when you look at various technologies what are the right fit for the business?
Sure. Yeah, you know through trial and error in a way. So you know through introducing specific startups to the businesses and their reaction to why that particular technology either fits or doesn't fit. And that constant back and forth allows you as the individual working within the venture unit to get better and better, being a better and better filter. So the longer you're engaging with the business units and the more often you are, the more you become that higher quality filter. And then once you find a match, what's wonderful about working in corporate venture capital versus institutional venture capital is I have experts in all of these technology areas. I have like the foremost battery experts. So I can go to them and say, I think this is something. It feels like it matches. And then they do the deep dive diligence on our behalf. And that's a real great benefit.
I just have a follow-up to this. Is there one sort of new technology you're really looking for right now that's going to be breakthrough for the business?
So for us, I'll just point again to the outdoor business. So it's all about electrification and it's all about autonomy. So for us, we are looking at a ton of technologies that the automotive industry have been looking at because we want to make those mowers totally autonomous in a few years, so that when your landscaper shows up, he or she just sets the mower off doing its thing, and then they do the higher order work like the landscaping and the edging and whatnot, because it's all about the labor issue, right? It's hard to find labor in that industry. And so if you can do something that can help those commercial landscapers be more productive with less labor, they're excited about that.
Right. That's a really interesting. I'm jumping to Mark now. So Mark, your background is incredible, right? You have a PhD in artificial intelligence, leadership experience in the Air Force, the CTO of SBD, and now running commercialization for Lockheed Martin. How did you do this in one lifetime? Okay.
It's not done yet. But your question.
Yeah, I'm getting and he reads minds too.
A great wife and wonderful kids. No.
What makes you decide to pursue a specific technology? We heard from Dina, they're being driven by the business, right? Which makes complete sense, and really looking at how transformational technology can change their business. How do you decide what technology to pursue at Lockheed Martin?
So, like actually Stanley Black & Decker, it's an ecosystem. There's a venture investment, there's accelerator, internal, external, and so on. There's a variety of mechanisms, including the broader ecosystem universities, right? I'm very proud that we actually brought the first National Science Foundation grant. Actually, it was not with the Connecticut University, I'm sorry, with UMass, but they came to us in Connecticut, and we actually initiated research and fundamental research. That's generally not what happens. At Lockheed Martin, we actually leverage, my experience both at MITRE and also with Techstars at Stanley. We use the lean business canvas, right? So we look at, is there a customer desire? Is there economic value? Is it unobtainium feasible? And we actually use a sophisticated system there, TRLs, technology readiness levels, manufacturing readiness levels, and commercial readiness levels, something we invented 15 years ago and have used in a variety of institutions. And then finally, importantly, from an institution, as Dina was articulating, what's the institutionalist advantage? What's the Lockheed Martin advantage? And frankly, there are only three for all institutions, in my opinion. And they're, as Dina was saying, people, right? I put that under sort of capability, right? So, what laboratories, talent, et cetera, do you have that's unique? Capacity, what's your supply chain advantage, your manufacturing advantage, et cetera? And then your customers, right? So as you were talking, about you want to make sure there's a market there, right? So to me, the Lean Business Canvas, which we've tailored, we actually have 16 questions we ask for every inventor, and it's not this is a necessary but not sufficient, right? As we were just discussing, some markets are much better than others, so choose wisely. But our calculus is sophisticated in the sense that we're looking at both market opportunities and whether or not they're core or not. So we only focus on things that are actually in our core or near adjacencies, and I would even some cases say very near adjacencies, and that's intentional. We also have a strategic set of 6 technologies that we focus on. Autonomy AI was mentioned. Right here, 20 minutes from here, we have Sikorsky, who's just on the news, so I can talk about it. Matrix, we have a autonomous helicopter that's been in operation. We actually have autonomy. It's not just about helicopters. It's lots of other vehicles as well. You've probably all seen the recent Tom Cruise, Maverick, Top Gun, right? You saw Dark Star in there. So hypersonics, that actually is an aircraft. Truth in lending, it doesn't fly, but in spite of the great CGI, and I was
supposed to tell him.
I was PR's got me in trouble. But importantly, we like Dina articulated, we're customer centric. We have the advantage of the government funds us to work hard problems, and so we kind of have an advantage over another, let's say. Freer organization startup that doesn't have those requirements that, no, this thing must, we love 100X, we have one nanotech it's 100X less expensive, 10X lighter weight. It's a little thin film optic that we've invented. And one final point, from a technology perspective, where you're looking at sort of tech push as opposed to user pull, we emphasize platforms. And you alluded to it, Kerty, and a little bit before where you were saying, we think of things much more than the inventor can, right? Because the inventor, I've got several patents to my name, and I know I myself get very blinded of this will be good for X, and you don't realize, there's an educational opportunity, there's an oil and gas opportunity, there's a medical opportunity, and so we look for platform technologies, or we're biased towards platform technologies because they can be maximally beneficial to society and the stakeholders.
So are you investing very early in some of these technologies? Or like early?
Paper napkins.
So,
TRL 0.
Yep.
Because of who we are.
Yeah. So then how do you know how far to take it? Like what's your process for deciding this isn't it? And it's not going to work.
Well, you don't want to smother the baby in the cradle, right? And so you need to have a bunch of infants around that can try the experimentation. You have to have some focus, too, because if you just say researchers, invent us a new material and just make it really neat, right? That's not useful. I want a metamaterial that's going to survive, 1,000 feet under the earth, 1,000 feet under the sea, in deep space, and in certain environmental conditions, right? So you have to be very specific about what you're going after. Why? More importantly, the why, because the why may reveal that we do value chain analysis. It may reveal we're trying to solve this problem over here. What if we just changed the way that the user operates? Now that's not easy,
right.
But if you come in and you tell them, you're trying to do things up here. Why don't you do things over here? It changes the calculus. And so one of the important advantages we have is we're very committed to modeling and simulation. And there are a number of commercial enterprises that Stanley Black & Decker designs all of its tools digitally in Towson and it 3D prints them and it shares them with their users before they use them. And that's where you get great ergonomic designs, which fill my garage. They're wonderful tools. But importantly, they're simulated initially. And so we simulate the world, futures, systems, all the way down to technologies, and that unlocks, why do we care about AI? Well, AI can unlock a tremendous amount of value. Are there risks? For sure, and we're committed to responsible AI. And so as a scientist, you have to also commit to boundaries, right? Whether it's biology or whether it's technology. Where are you going to limit your scientists from going and say, no, that's not ethical, we're not going to do that? And so, we have guidelines, even in AI, we have the AI risk management framework that NIST has forwarded. We have the European Communities AI Framework Act that just got drafted and released last week or the week prior. So it's important to control the development as well. So I'd say, to answer your question more succinctly, focus, technologies, controlled, setting boundaries, and then be open to outcomes. One of the things that we learned tremendously from Techstars is pivot, right? I remember many times we'd have a meeting, we'd be like, okay, we've been going for 2 weeks this. Nobody likes this thing, but they want this other thing. Let's do that, right? And so you have to be open to outcomes.
I have a follow-on question, but I want to get to Michael, and I'll come back to you.
I was listening. I was enjoying it. So,
I
you want to keep going. I don't know what I have to say.
So, Michael, you do something a little bit different, right? Because you're more impact investing, and you're more investing early in some things that can really make a social impact. What's different, and what's your framework for deciding, and how do you decide if an emerging technology or breakthrough technology is going to be good for and a positive impact?
Yeah, I don't think at the end of the day it's that different. I mean, we really believe that market forces and for-profit, market-driven companies are the way that we're going to solve at scale these long-term tractable issues we have with the environment or education, or these are structural issues. And so when we put on our impact hat, it's more of just thinking about what our frameworks are, what our thesis are for change. And we always think about what is the thesis of change, because most of the times we're bouncing up against very well-established structures. And like when we started in education, like you're playing against the machine here, right? And how are you going to think about change? So what we've been very fortunate to have now in building, we started in education, but now we've moved beyond that. We've been fortunate enough to recruit and have these incredible founders of our funds who who are deep thinkers about very specific areas, right? So we started in education, and that's from early childhood to K-12 to post-secondary to lifelong learning and employment, and thinking about what's the connectivity between all those things, and then getting very deep specifically in those, so we can afford to think long term about very specific areas with people that are very knowledgeable and experienced in very specific things. So we tend to think about developing thesis around issues. Like as I described in education, we have theses in all of those particular areas, and then we think about connective tissue between those. We tend not to invest in direct-to-consumer items because for us it's about equality and access for education, and so direct-to-consumer tends to be about disposable income, and the haves are able to spend more, and so we think about how we partner with institutions. So those are the types of ways that we think. When we think about investing and the companies that we look at, again, I think it's very similar to what you were talking about, Kurt, is founder, and I even think with impact, founder is even, as we think about it, more important. We find people, and I was just talking to Joseph about this, like I feel blessed every day. I wake up and meet these incredible people every day that are thinking about these huge problems, and most of the time it's through lived experience. And when we're talking about inequality, education, healthcare, I mean, our Rethink Impact platform invests into women-led businesses. I think last night women receive 2 to 4% of venture capital that is deployed today. It's insane,
and
right? And so, when I think about how we think about, first of all, I don't know what stages are anymore. I'm old. I think I'm old now because I complain that what used to be an A round is now like a seed round or a pre-seed round or a pre-seed. I don't know what anything is, but we invest early, and I think we primarily are in pre-seed and seed and some Series A now across our platform. But the founder is, to me, the key point, and the lived experience, the insight, and whether that's an academic insight or a personal experience insight, they've typically lived this. And when somebody's lived something and then they've decided that they're going to dedicate their professional and most of the time beyond their professional, most of their time into solving a problem, they don't give up. I mean, the people that we find and that are doing the things that we do, they have something inside that I have to do this. I can't tell you how many people I meet every day that could have been a banker at Goldman Sachs or could have been a scientist somewhere and had a very nice life, probably made a good amount of money, but they've decided to go into this world of entrepreneurship, and they're all in. And that's, we recruit young people to join our team all the time. They come out of very nice schools and they have great experience, but I always tell them, no matter what we think of the entrepreneur's idea, as crazy as it may sound, we're going to respect them because they're all in. These people are all in on an idea and a vision of the future that's better for all of us. And so those are the people I want to find because they don't give up. I mean, we have one woman entrepreneur that's finally having her breakthrough moment 8 years after. And she has, this woman is incredible. She describes her journey as these ups and downs and this thing called the trough of sorrow. But she would never give up. She would go to her grave before she gave up on the mission that she's on. And so those are the people that we find. Then we think about, does this line up with the thesis that we have? Is it consistent with how we think about the world? We may not be right, and a lot of times we're wrong, but is there alignment on the thesis? Do we see the opportunity? And is that a future that we imagine and the things that we want, whether it's in food tech or education or healthcare or financial mobility? These are the things that we're thinking across every day and how we think about it. So
Thank you.
I can talk forever. So
No, and I have more questions for this amazing panel, but I wanted to see if we have questions from the audience because it's a pretty amazing group of people.
Yes.
So this is really a good panel. Thank you so much for your insights. Appreciate it. So I survive in an academic environment. We do tech transfer and startups. And what we face is a big challenge with the faculty. And the challenge is they're passionate about doing things, not understanding that the baby might be actually may not grow.
The what? Can you say that again?
baby might be ugly.
Sometimes they even malform. That's worse.
The second challenge that we have, which is more logistical, is how do we convince them that startup is a full-time job? It is not a part-time, keeping my job as a faculty, running a lab, writing a grant, doing all this. And then, by the way, I have a hobby. So based on your thesis and based on your identifying the phenotypes that you've been talking about, how can we transfer that sort of a knowledge into our sort of environment to do that?
I feel like that's you.
You know, that's what I do, actually. Or have been doing very specifically around solutions to substance use disorder with a Yale team here at Yale, and we've been running it online. And it's really designed for academics, faculty, scientists, and one of them's here, one of our alumni is here, that are focused on getting their research out of the lab into the marketplace. And what's interesting, we've had 130 alumni in our program, and just recently several of them have reached profitability. Several have decided to completely leave academics for their startup, and others have decided to do both, a toe in one water, a toe in the other water for a long period of time. It's really a personal decision, but learning what it takes to be an entrepreneur is what's really important, because it takes a lot. As they've all talked about, takes a tremendous amount of hours, dedication, passion, the willingness to get rejected 150, a million times. And so our program, which is a 5-week program, takes you through that process with other entrepreneurs that you can learn from. And so that's what our goal is, to help academics make that decision. Yeah.
So I spend a lot of time doing this with universities. I'm starting a company right now with Columbia. We've started a company out of here at Yale because we incubate companies in-house. And I think one of the bigger pieces of the problem that we see is actually building, a hammer and then looking for a nail. And a lot of you have mentioned pain points. That really is a fundamental driver. And so actually changing that perspective around what is the true problem you're solving, and how does your science impact that, I think actually starts to radically change even how the professor or academic or whatever part of academia they're coming from think about the business differently. And so in our Yale example, Transcend Therapeutics, they went out and raised a $40 million Series A. Dr. Ben Kilmendi, who is a professor here, is the co-founder of that business. He did not want to do it full time. As he tells me, I have 2 kids and I'm tenured here, so no offense, but I'm good. And I said, that makes sense. But he is a scientific advisor. He spends a lot of time with the CEO. And in that case, we brought in a CEO who was the perfect person, came from that world, et cetera. And on the flip side, in the Columbia one that I'm working on right now, that professor does want to do this full time. They have the industry connections with Intel and Samsung and IBM and TSMC, et cetera. They have the background of being a 20-year professor and, can kind of take a sabbatical and aren't worried about Columbia's relationship. And the tech transfer office at Columbia, CTV, who AliCorp is very close with, is sponsoring and supportive of that as well. And so I think there are, to your point, a lot of paths to take on it. But to circle back, you have to understand that what is the pain and what am I solving for? And then is that going to be my life's mission? I think you said it very well. If it is not the life's mission or a big piece of that, it's very hard to back or be behind a founder that it's a hobby, as you mentioned.
And I just want to underscore, the first week of our program is all about what's the problem you're solving and how big is that problem. And then the second week is who is that customer? Because that's the other part of research sometimes. Who's going to pay for this? How is it going to get paid for eventually? Doesn't have to be right today, but how is it going to get paid for? Just seeing through what you're doing and what that whole model is really important.
If I could just absolutely add one thing, and this is just an element of it. And Yale does this. I reviewed your incentive program, And basically, how does the money flow? And it flows, interestingly, back to the inventor, to the department, to the project, and so on, right? It's an interesting model. MIT's model is slightly different, right? 25% of the revenue goes to the researcher, 50% goes to the institution for research, future research, and a quarter of it goes basically to administrative costs and so on. That's what I did when I was CTO at MITRE. Actually, I convinced my board to follow the MIT model. And, interestingly, the question, and again, incentives is just one element of it. You got to be committed. You got to have a good problem. These are all fundamentals. But if you don't have the right incentives, then you're like, oh my God, do I do my day job? And I'm working on the weekend. It's like, yeah, you should be encouraged to do that. We also have to have work-life balance. So it's got to be appropriate for the person in the circumstances. But if you don't have that incentive, right, you're not going to motivate the right behavior. And you got to be careful about the way you articulate the incentive as well.
But it's not just incentive. Like we would say in our program, it's also you got to make this sustainable,
Absolutely.
right? So that's the downside. A lot of scientists and academics don't look at is how is it going to get paid for? What's that business model? So how can you sustain this over time? How can you grow it?
What's your exit model, right? You maybe just want to be an inventor, right? And what you really need is people to license your technologies. Or you need, like we did at Stanley, we set up Stanley X, and we hired people either inside or outside the company to be CEOs of our ventures. We did the same thing at MITRE. We brought people in, and we said, we'll allow you to incubate. If someone in the company wants to leave or stay, we just design them, to your point, to the individual need.
Yeah. Great. Thank you. Is it? Okay. Up there.
Thank you all for the panel. Appreciated. This question's more tailored towards Dina and Mark on the corporate VC side. One question I had is I understand that you have your own product partners internally in your organization. You look for what to invest in, and the mutually beneficial relationships is you can also provide that expertise to the companies. Is the only benefit that you get as a corporate the financial returns, or is there any type of a learning you can also get for the technology?
That's a great question. Thank you for asking it. So it's much less about the financial return. And I say it's important not to lose money, but it is very, very difficult for me to make enough return on a particular portfolio company exit. It just doesn't move the needle for a $17 billion company. So although we're happy when that happens, and we strive not to lose any of our principal, it is truly about all of the learnings that we get, right? So we are, a 180-year-old company. We work in a very specific way with very specific processes and metrics and meetings and whatnot. And so we learn from the entrepreneurs how to pivot. Like there's DNA that the entrepreneurs bring that when they interact with the business units, we learn from them in that way. And then we just many times don't have the DNA inside the organization to quickly develop the innovative technologies that we need to stay ahead of the competition. And so we learn a ton from that, and we are able to leverage that amazing, it's almost, you can think of it as a supplement to internal R&D. So we decide what we want to develop in-house and what we're really good at, and then we leverage outside technologies in areas that we don't have the skill sets inside to develop in the time frame that we want to develop them. So it really is a wonderful give and take between the corporate strategic and the startup, both ways, right? So things that we provide the startup include mentorship, guidance, advice on how to get their bill of materials down if they're a hardware company, and we look at a lot of hardware companies. And then the most important is that we can incorporate their technology into either a new product or an existing product and then sell it through our amazing channels like Home Depot and Lowe's and Amazon under one of our iconic brands. And that really helps the startups scale. And so it's a wonderful two-way street. Did I answer the question? Okay, great.
Yeah, Dina's being modest. She makes money for Stanley Black & Decker. So, but to her point, in the venture capital community, there's oftentimes a distinction made between strategic and financial investors. And, Stanley is absolutely a strategic investor because, as you said before, you won't invest anything and that's got a real business opportunity. We're a little bit more of a financial investor wanting to become a strategic, which we like to be like her. a little bit more. So we invested $100 million in LM Ventures. We doubled it to 200, and we just raised it to 400. And interestingly, it's now self-sustaining. So we talked about sustainability. There are all kinds of sustainability: personal, organizational, financial, environmental, right? And so you really want to have a sustainable approach. And so that includes being a good citizen with respect to the startups. And frankly, I think I would give us maybe a C in terms of how well we, corporations in general, because we're the largest defense contractor in the world. We have to deliver $67 billion worth of orders every year, right? That is a hell of an activity to do with 118,000 people in 60 plus countries around the world. So we've got to do that. If we don't do that, safety and security of the world suffers. It's pretty serious business. So, along comes a startup. I'm gonna rock your world. Great. If you're gonna add 100x value, I want to talk to you, right? But, you've got to be realistic about how you're going to, and so, what Stanley's done really well, and I think Lockheed does well as well, is we're really clear with, these are the kinds of things we need, so it helps focus the startups. But what we need to do better, startups, you live and die by an order, and, our order cycle is measured in years, not weeks, not months. And so that's an example of how you have to either create an internal organization that can deal with that impedance mismatch or create new processes. And we've just created LM Evolve. 6 months ago, we actually have a subsidiary, a limited partnership that helps create new startups. And so that helps us internally.
Thank you.
My question is, well, I'm an education technology founder, but I think it's going to have broader parallels, which is that in our experience, where we've really found traction with our early ideas is people that have no solution at all to their problem. But when you're trying to do something in a transformative technology that has broad applications to fields that are very developed, like education, my question is if you guys have any insight on how to translate a technology which can solve like a point source pain point and slowly transition that to having a much broader impact across the entire chain, because we've had a really hard time engaging some of the traditional stakeholders who are really entrenched.
I'm going to ask Michael, because of Rethink Education, to take this. Is that okay? Or at least to start.
Yeah, not knowing nothing about where you are, but I'm happy to talk about it after this. Well, I'd say my first thing is to getting really good at one thing, right? And that I think that as we apply, there's so much money awash in what we do. I think that people get beyond what the original problem was too quickly, right? Get really good, be really important to your customers, focus on that one thing, and begin to project that out. But if you're in, I don't know where you are in the education cycle, but if you're thinking about one place, there may be and maybe great opportunities as we talk about like kind of TAM expansion, and don't let people like me drive you outside of what you're doing. Like the natural behaviors of your business, the thing that you're solving, get really good at that, get sticky with your customers, and then those additional opportunities begin to present themselves as extensions of products, or you begin to see natural fits through the evolution of your product cycle. But product focus, being really good at something, because we also see in education a lot of times kind of false mirages of product market fit, like getting a district or a school or 5 schools to adopt something. We've seen that be a mirage, right? And so, again, happy to talk to you about it more, but sticking to your product and not getting too focused about all the adjacents yet, but love to hear more about what you're doing.
I'm going to ask Kerty to follow.
Yeah, I'll just add one thing, because I completely agree with starting with a wedge. If you run into difficulty in that wedge, so again, we don't know how early you are, but a lot of times that's when people start to think, well, this must not be it. It must be something else. There is learning in every single conversation you're having. So rather than thinking about it from what have I created, it's what are they telling me that I'm not even asking for? There is data in front of you all over the place, and you're going to hone in on actually what they're telling me is this is what they need. So now I can start focusing there and then start accumulating more and more of those. As soon as you've got literally repeatability, you have found product market fit to begin with, and then you can take it where Michael was talking.
Yeah, just to underscore, don't be a technology looking for a problem to solve, right?
Yep.
Here you go.
And just to build on the earlier question about corporate venture capital, I'm curious, within your organizations at inception, how was the alignment issue dealt with regard to, and perhaps it was discussed earlier, we walked in a little bit late, but with regard to how you align sort of those traditional corporate processes, objectives, business managers with the actual implementation and incentive to actually want to implement and deploy and innovate?
Do you want to take it first? Think about that for a second.
Great question.
So one of the things is data, right? One of the things we did at Stanley is we looked at the value contribution of, we had 6 levels of innovation, which, by the way, I've adopted now within Lockheed Martin. I learned a little bit through experiences. And what I was able to show through hard data, so 500,000 SKUs, half a million SKUs at Stanley Black & Decker of all kinds of things, like Dina was talking about, all kinds of brands. If you show a P&L leader, if you invest in an incremental capability, you're going to get 1x. So you got a $100 million business, it's going to be $100 million next year. If I get my 100x, right, revolutionary, world's first, right? We just invented perforin a couple years ago, right? It's a nanopore, filter, right? Works in medicine, works in, desalination. It's just like, wow, right? That is, based on my experience, a 2 to 4 to maybe more X revenue generator. So if you got a business of 100, it's going to be 200 next year, or it's going to be 400, it's going to be, $1 billion. But you have to, you can't just write those down and say, oh, I've invented this thing, it's going to be a hockey stick. No, you have to show them their data. And it turns out actually the data is pretty clear. And I've talked to a number of the consultants organizations, I won't name their names, and they validated that across other industries. To say another way, we kind of know this intuitively as scientists and engineers, is innovation creates value, right? Not always, but generally, it's going to create value. And so if you can empirically convince them, what I found is it's a hard human activity, right? There's entropy, right? There's, as you were just talking about, Michael, there's lots of, preformed, opinions and inertia and so just leave me alone. I got $67 billion to sell, right? Just to deliver, just leave me alone, right? But you're going to be extinct in 5 years. If that revolutionary thing comes along that does do 2 to 4x every year. So I think the data, in my experience, the only way I really compelled, there were some true believers. And by the way, the belief generally goes from the top to, because these are leaders who are change masters, right? And then their disciples get it. Right? And then the level below it, well, yeah, if you really want me to do that, boss, I'll do what you tell me to do. And the next level down, it's like, are you nuts? Right? I've got to deliver. Right? So get out of my way. And so, Martin Reeves, the head of the Henderson Institute at Boston Consultancy Group, has written a lot on this, on innovation. And he talks about the need to be ambidextrous in your organization. So your line leaders have to both deliver the core and also explore. They've got to do both because their competitors are doing that. And so, again, my experience, show them the numbers. That's what made a move.
Was your question also about how you cross that chasm between the pace at which the big business moves and the pace at which the startup moves? Was that your question?
Frankly, I think it's the whole thing.
Okay.
Everything from
okay.
How to get them to be the team, line managers all the way up to
sure.
be interested in deploy, as well as how do you bridge that gap between
yep.
the startup that's under-resourced,
yep.
understaffed, and big corporate that has
sure.
everything in its arsenal.
Yeah, so I would say the only thing that I would add to what Mark says is it's super important to outline within the commercial agreement. So when we invest in a company, we have the investment documents which govern that, and then at the very same time we're crafting that commercial agreement which outlines very clearly the time frame in which Stanley Black & Decker intends to incorporate that technology and then launch it. And so that actually is where people on my team excel in helping bridge that gap, right? To make sure that that commercial agreement outlines how fast Stanley needs to move in order to keep things like sometimes we get limited time-bound exclusivity, so they can't sell through a big competitor of ours for 2 years, but only if we're able to stay on that timetable. So that is one way that we really try to bridge the gap between the speed at which a behemoth like a Stanley Black & Decker moves and how nimble and fast startups are.
So thank you for this panel. It's been great. I love it in transformative technology, but as a founder, most of the investors out there are so used to doing software that whenever you bring something that's science-based or has any regulatory problems or any equipment purchases, you can see them glaze their eyes and they try to connect you with somebody else, usually leading to nowhere. So how do you bridge that gap? Is it just looking for specialist investors like you, or is there a way to talk to the general, because there's so many investors in New York where most of them get that glassy eye right away?
Oh, I'll just start with that because we run into this all the time. But as a founder, you want to put together an investor list that fits you. And it's everything from, do they invest in the type of technologies that you look at their portfolio pages, you talk to some of the companies who have been invested by them before, and then also match the stage of investment. Forget the names like you mentioned, who knows what name it is, but are they investing, a minimum of $1 million, or are they investing a minimum of $100,000 or $10 million? So kind of figuring out, do they fit in that? But I would absolutely not waste your time on any investor who does not seem to invest in the type of area that you're building.
I think there's just been such an expansion of capital and specialist investors, whether it's corporate, strategic, or specialty investors. I mean, we're specialty, but not at that level. And I would agree, I think there will be, you just got to go find them. And I think that they're more abundant now, but if you don't have alignment going in and are understanding what they invest in, you're going to get what you get. The generalists will shy away. Yeah, the generalists they will glaze over. They will say, not in my box. It's too easy to say no when you're faced. Remember, on this side, you're looking at thousands of deals a year, and so people tend to work in frameworks and boxes and say, hey, it's just so much easier to say no right away because it doesn't fit in this very neat box, even though you may think it fits in the box. But I think it's just, to your point, just creating alignment on where you're looking. I know that can be hard, and everybody's not always very forward about, we all want to see everything, so we don't always define the boxes. So
I just want to reinforce, really know who you're pitching to. And what we would say in our program is to create the ABC list of investors. And there is Crunchbase and PitchBook that you can use to see who's invested in what. And then the A is your top priority. Those are the top 5 investors you'd really love. B is in the middle. C are the people that you're going to warmly talk to and that will be introduced to you and you can practice on. But know and prepare and understand who they've invested in before. And some investors that have invested in what exactly you're doing won't even talk to you because they've invested in a competitor. So you just have to understand that whole piece of it. And there's lots written out there about it. I'm sure I have a blog out there about it. You probably do too. But really do your homework.
That's what I was going to say.
Yeah. Anybody else? Here we go.
How do you think about investing too early, where there's still sort of R&D happening, and you're intrigued, and yet you're in the business of making money, and how do you sort of put some parameters around that?
So I can start. Whenever I bring this question to Kevin Ryan, who's the founder of Valley Corp, he says there's no such thing as too early. So he would get along. But for us, you have to understand which piece of it is too early, in my opinion. And what I mean by that is, what point of the company are you currently operating in? Are you solving a technical risk, or are you solving an operational risk? And I think investors, depending on how they invest and what they invest in, and also their speciality, like we've talked about, will view those differently. In my day-to-day, and we invest early, and I don't know what the rounds are called anymore, it's just early. I look at technical risk, and I make investments based on decisions around, I think the technical risk is going to pan out, and that's where we're putting capital because of that. The operational side will kind of come with nature. Our other investors that we're going to bring into the rounds later will bring that perspective. But I'm using a material science background and having spent a decade doing research there to understand the technical challenges and how do we overcome them. On the flip side, other investors will do the opposite, and I work with a lot of them who do. Once you get past your technical risk, then I want to have a conversation, right? We believe in the technology, it works, it scales, it integrates, and those are the big questions we ask. How do we then scale or operationalize that business? I think you have to understand and play to your investors, as we've talked about. The third point that I would make about it is to really understand, as to be reiterative, where you're driving a difference and a change. And so if you're selling to an organization or building a company that is 100x, in helicopter technology, and you can prove that from a science perspective, maybe they're interested in talking to you at an early stage. On the flip side, if you're building a business that is less, impactful or hinge based on that and more on the operational side, it's a platform technology. It's a new type of business model. It's a licensing coupled with a material sale. Those will be investors or partners that will want to see that aspect of the business. I think that's where you have to really hone down from an entrepreneurial perspective and understand the dichotomy between those two.
Yeah, similarly, I'd expand the question to early is, in our perspective, holistic. Is it technically early? Is it manufacturing?